Good evening, everyone. I'd like to call to order this meeting of the Finance and Audit Committee of the Sacramento Metropolitan Fire District. Welcome one and all. Madam Clerk, would you please take the roll?
Yes, Director Clark, Director Stark.
Here.
Director Jones.
Aye.
Thank you. All are present.
Okay, thank you. Now we have the public opportunity to discuss matters of interest within the committee's scope, including items on or not on the agenda. Do we have any speaker cards, Madam Clerk?
I have no speaker cards.
Anybody online?
And there are a few people online. If you're wishing to make a public comment, please use the raise your hand feature. No public comments. Thank you.
Thank you, Madam Clerk. All right, Chair will entertain a motion for consent.
Second.
Moved and seconded. Roll call, please.
Yes, Director Clark, Director Stark.
Aye.
Director Jones.
Aye.
Thank you. The consent calendar is adopted.
All right, moving on to presentation items. We have our bi-monthly fiscal report through June 30th, 2026. Welcome to the podium, Mr. Dave O'Toole.
Tonight. Okay, tonight I'll be presenting the bi-monthly fiscal report through June 30th of 2026. So that's the full fiscal year, final bi-monthly report for fiscal year 25-26. Moving on to the, we need the slide. There we go. Thank you. Total cash balance trends for June 30th of 2026. So this is cash from all district funds. So general fund, Measure O, all the others. The red line is this year and the green line is prior year, fiscal year 24-25. The trajectory after the 12 full months of the fiscal year shows that the cash was positive 205.3 million, which is about 119 more than June 2025. So the distance between the end of the green line and the end of the red line. And that's because of Measure O, because we received bond proceeds during that fiscal year, which substantially improved our cash balance position. This next slide is, next few slides will be focusing on general fund. This is starting with revenues of all general fund revenues. Again, the red line is this year, the green line is prior year, fiscal year 24-25. And the blue line you see here is final budget estimate, which helps us see how we finished relative to the budget. You can see that the total projected revenues in the budget projection was 343.6 million. General fund shown in the blue line near the top right. And as indicated by the arrows, actual revenues through June were 360 million. About 37 more than prior year revenue. And relative to that budget line, the district finished about $17 million over. And I don't want to suggest that it's a little bit of a skewed number because it includes about 20 million in committed funds for the POBs that show up and get counted as revenues in the fiscal year. But we'll see a little reconciliation in that later when we get to the final budget. Looking at a subset of revenues is medic revenues or EMS revenues. And as the lines show, we track very closely and very consistently across the year. At the end, though, the red line finishes at 47.8 million, which is approximately 1.3 million below the budget at the end of the year. In fact, the income through June 30th was just 800,000 above where we were last year at this time. So that's a picture where we finished with medic revenues. Moving on to another transport-related revenue, the next two slides are PPGMT, Public Provider Ground Emergency Medical Transport Program. And this first slide is looking backwards at the first 30 months of the program, just tracking for your knowledge of how the district has progressed in collecting what we anticipated we would collect over that first 30 months. And those bars each represent a quarter, and at the top of each quarter is the percent that we expected to generate that during that quarter. When you add it all up, the difference, and shown there in the bottom, is we're about 900,000 short out of about 53.3 million. So we collected 52.4 million and we're about 900,000 short. So pretty darn close. And For this slide, we'll probably cease showing it and give you more summary information in future bi-monthly presentations. This slide, however, is the full fiscal year for 25-26, and you can see that the gray column shows that the monthly revenues were expected during that year were about 2.3 million every month, and the number kind of jumped up and down a little bit for the first half of the year and then started to slip. And in May and June, revenues were actually under target by about 600,000. But as noted at the bottom of the slide, actual collections through this month were 26.8 million, and the amount anticipated was 27.1 million. So we finished the year under collecting as of June 30th. But I can just foretell that we do, with revenues, revenues that are received for transports that are collected, received for transports that occurred in that fiscal year that are collected after the fiscal year get rolled back. So that number is actually going to bump up, and you'll see a higher number when we get to the final budget because of those revenues that came in after June 30th. Okay, so moving from revenues to expenditures. Again, the blue line is budget and the red is the current year, 25-26, and the green line was the prior year, 24-25. After 12 months, general fund expenditures were 359.6 million, which is actually 8.2 million less than what we have in the budget at the end of the fiscal year as of June 30th. And a subset of those expenses are labor costs. And again, as of June 30th, actual labor costs were about 3.8 million more than last year, but also 4.8 million below what we had in the budget as of June 30th. So those are the slides looking at high level revenues, general fund revenues and expenditures. Now we're going to take a look at reserve balances. The red line again is current year, green is prior year. The red line was 25-26, and the green line was the year prior to that. You can observe that the reserves have merged closer to their historic pattern, markedly lower in December, same as we saw in January, and higher in June as the second tranche of property taxes comes in. Reserves finished at 47.3 million at the end of June, about 4 million higher than last year at that point, when they were 43.4 million. So that is the reserve update. This next slide is the pension and OPEB trust funds kind of put together on one slide here. The top half is the OPEB trust fund and called the California Employers Retirement Benefit Trust. And that is showing there that since the district has contributed, since inception in 2013, the district contributed 68.8 million of the 124 million value. Looking at the far right, you can see the effect of the overall investment marketplace, what's happening. The green area is growing. Returns in the last year were in fact 22%. Looking at the table below for the pension trust fund, the SEPT, it shows that we've deposited $1 million into that fund, and we've earned 164,000 just the first 12 months. That's about a 16% annual return. So not bad return on either of those trust funds this year. And your major takeaways for the bi-monthly fiscal report. Let's see, revenue from all funds was approximately 119 million more than last year, again, mainly due to Measure O proceeds. EMS income was approximately 1.3 million below budget through June. PPGMT was approximately 300,000 below through June. And general fund expenditures were approximately 8.2 million below budget through June as well. And then, as I just mentioned in the last slide, OPEB and pension trusts have done well, 22% and 16% performance respectively. And that concludes my presentation. Any questions?
So just want to emphasize, our expenditures were $8.2 million below our projections. Is that correct?
As of June 30th, correct.
Right.
Mm-hmm.
Okay, thank you.
Rolling right along. Yeah, I understand we have Keith Mitchell.
Yes. Good evening, Madam Chair. Thank you, Board, our Chief House, Members of the public and colleagues, I am not Aaron Castleberry, nor am I Jeff Fry. I am the sub for the sub, but I do want to recognize Aaron's work in this space, as well as Jeff Fry having a last minute personal item come up. And so I'm happily here to present to you the capital improvement plan for the next 5 fiscal years. As you know, back in June, the board adopted the district CIP for 26-27 through 30-31. And now during this final budget process, we have the opportunity to review the approved CIP and make any necessary adjustments. Okay, I already broke the clicker. Where's it at, Ethan? No,
Oh, everyone's busy.
that's what you get with the sub for the sub, I guess. Can you just click it? I'll just give you the nod. Okay. Huh? You took the batteries out for me? Thanks.
Battery?
Okay, so amendments made to the CIP may be project revisions, cost revisions, or a combination of both. So under project revisions, we would see completed projects or new carryovers that we didn't expect at the end of last fiscal year, any added projects or scope changes with projects that were approved in the initial CIP. Cost revisions would be due to year-end actuals, confirmed cost, revised estimates, deferred costs, or cost reallocations. So those would be the drivers of what we need to look at through this review process. So as you can see here, the amended CIP reflects only minor changes in the total cost of the 45 recommended projects, resulting in a net increase in total project costs of $27,635 over the 5-year plan period, so relatively small. Changes included cost savings in apparatus and equipment project costs, and increases came in facility improvement and new construction project costs. Very, very close to what we anticipated, just some movement within those different categories. In the short term, at the impact of this current budget year, the increases in facility improvements and the new construction project costs for fiscal year 26-27 were fully offset by the cost savings in apparatus and equipment projects, resulting in a net reduction of $172,365 in the CIP budget for this current fiscal year. Here's a summary of changes. The table shows the breakdown of the types of changes that contributed to the net reduction in this next budget year CIP. Increases in a reduction in revised cost estimates are based on actual quotes or bids received. Added carryover project is for a project that was not fully completed as anticipated in fiscal year 25-26 and will be anticipated to finish this next fiscal year that we're in. And then reductions in the year-end actuals reflects projects that were included in the fiscal year 26-27 budget, but ended up being completed earlier than anticipated the last fiscal year. So as you know, the CIP budget is funded through contributions from a mixture of different funds. The most significant change reflected in the amended CIP before you tonight is the reallocation of funding between the I fund and the O fund, with the I fund now sharing a larger portion of the total costs for the construction of Station 67 project in this next fiscal year. The allocation between the other funds remains unchanged, and you can see that there with the reduction in Measure O funding and the increase in the Development Impact Fee Fund. We recognized some savings at the end of last fiscal year, and so because those funds are limited on where they can be used, we wanted to maximize those funds in that Development Impact Fee and then have availability for the Measure O funding that we know is going to have some other projects coming forward. So as demonstrated tonight, the team works diligently to ensure our CIP includes the most accurate planning estimates, and we hope that the board will move forward with the adoption of the amended CIP. Thank you for your time and attention, and that concludes my presentation, and I will happy to answer any questions.
Do any directors have any questions or comments?
No.
Do we have anyone online? Or any, I don't think we have any speaker cards. Nobody online now. All right. And thank you very much, Chief Mitchell, for stepping up to be pinch hitter. We appreciate it very much.
You bet. My
It's
pleasure.
almost like being in Fenway, huh?
There you go. Well played. There you go. Thank you.
All right. Thank you very much. Yeah, that's what I hear. That's what I hear. Okie dokie, we have item number 3, 26-27 final budget. And we have, once again, CFO O'Toole at the podium. Welcome.
Thank you again, and good evening, Madam Chair, committee members, fire chief, colleagues, and member of the public. Oh, thank you. Good, got the good one. Dave O'Toole, Chief Financial Officer. Tonight, I'll be presenting the final budget for this fiscal year, 26-27. For tonight's presentation, the main point of comparison will be prior year, but there will be points where we'll be comparing to the preliminary budget, and I'll just make that clear when those comparisons are happening. So looking at the agenda looks pretty straightforward. I'll be giving an overview of the entire district budget and then focusing on general fund expenditures and revenues, followed by capital outlay summary. There's a highlight of changes, and then a few slides on the long-term forecasts and assumptions that go with that. And concluding with with a summary and your questions. So this slide is it is the district's entire budget, answering common questions like how big is our budget and how much reserve we have. Those answers can be found here. It's divided into sort of 2 sections with a gray rectangles at the top covering all funds and the blue covering general fund. So starting with the gray section at the top and kind of helping to orient you to the slide, final budget revenues, you can see on the revenues line there for all funds last year at final budget, the white column there, we're 359 million. And then moving to the right, you can see preliminary budget revenues for all funds were 364.6 million. And the final budget before you now proposes revenues of 367.6 million, an increase of 3 million shown at the right between preliminary budget and final. That's what that 3 million represents. And then expenditures, you can see in the between preliminary budget and final, it increased by 1.8 million. And then the change in fund balance is a negative 158 million, which is a decrease of 1.1 million relative to prelim. And that negative change in fund balance means that we're drawing more money out of fund balance and is primarily Measure O, as you would expect. It does not indicate a negative fund balance. Okay, so moving further south there into the general fund category, general fund section there, the blue, the revenues as shown there. Let's see, the revenues as shown there are, be able to read here, 347 million and 347 million at prelim, and then at final budget increased by 3 million to 350 million. Expenditures increased by 2 million, so you had more growth on the revenue side than the expenditure side. And then the change in fund balance at preliminary budget, we had a negative, we had a change in fund balance of 7.2 million. It's now been reduced to 6.4 million. So those are actually the amounts that we'd have to take out of the reserve to balance the budget. It reduced from 7.2 million at preliminary budget to 6.4 million, a change or an improvement of just under 800,000. And then the bottom row there is the.
So there's
Oh,
a
sure.
lot of different categories. So I'd like to ask a question about this because we're flying through this. Looking at the general fund preliminary and final, you have other finance sources and transfers of minus 4.141 million. Is that the money again for leases of engines that are going to be stopping soon?
Yeah, that would be a large part of it, exactly. Anything that would be coming out of the A fund to go into a different fund to, for example, leases that get paid out of a capital facilities fund.
Approximately how much of that money is of the 4.141 million is the lease?
Approximately 80%. I can give you a better
And
figure.
when is the last year that that's going to be done?
Have 3 more years.
3 more years.
Mhm.
Okay. I'm going to have other questions, but I'm going to have to stop it periodically because we go plowing through it and then I lose them when we come back.
Thank you, Director Stark. In fact, I'd like to chime in right now since we have this one up.
Yeah.
And Dave, I know you and I, we chat about this from time to time. When we look, what is the number, if someone on the street asks me what Metro's final budget is, what is our total number? We need to add revenues and other financing sources, right?
So the question
me.
is, how big is
What is our budget?
Yeah, yeah. How big is our budget, or what is our budget? Excuse me. The answer to that would be the expenditures, and and very often people are asking about the general fund. So that would be the 352.9 million rounded.
Wait, I don't know where you're looking.
So in the blue section, expenditures, final budget is, you see the 352 there?
No.
26, 27.
Yeah.
Okay, I'm interested in Metro's budget, all funds, and my hunch is that we need to look at I'm concerned about the revenues because we need to combine, I think other financing sources should be more distinct, i.e. Measure O or other stuff, because when you're reading in the pros, or you just glance here, revenues 360, expenditures 460. Oh my gosh, we're in trouble.
Mhm.
So is there a clearer way for me to understand what I know our budget's 526 million per the pros in the chief's report. Where can I find that number on this?
The 526 would be the expenditures under all funds. I answered that question
Okay, so
first.
someone asked me what our budget is. It's the second line over there. I'd like for there a way to be that more prominent.
That's including Measure O.
Exactly.
Yes, exactly.
And because that's, I know, everyone in this room knows that other financing sources ends up being a Measure O for the most part.
Yeah.
But if someone, my neighbor pulls this up and starts looking, they do not know what other financing sources are until they go into the pros and read like 5 paragraphs. And
Yeah,
I'm looking for a way to display that on some of these charts, please. I know you can do it.
Thank you. And on the next slide, we do show all the fund balances, and you can see that everything is positive or zero.
Okay, but this is the first page, and a lot of times people don't want to look past the first page. No offense,
Sure.
people, they're busy.
Yeah, understand.
I'd like to note here that if you're looking at the second category, which is general funds, the revenues are 350 million. The expenditures are 352. The difference between our preliminary to our finals in those two, revenues are up, looks like 2.8 million.
Right.
Expenditures are up 2.4 million. So
2 million, right.
2 million, I'm sorry. So the difference is the 794. The 794,000
Mhm.
is the positive number, correct, of our general fund revenues. We are spending less than we're taking in general fund, in the final budget,
Yes, that's correct.
correct. Thank you.
94 ahead.
Yes.
Well, it's not ahead. It comes from the reserves, right?
No,
Correct.
that's
It's-
money. We brought in more money than we spent
Exactly.
in the general fund in the
Revenue.
final budget this year.
Revenues
That's
and
what that
expenditures.
tells you right there,
Yeah.
correct?
Okay, and a few different
Let's all
statements.
take a deep breath
Yeah.
and take a look.
Yeah. So what this represents is there's an improvement in the preliminary budget. If you recall, I indicated the projection for the end of this fiscal year is that we would need to withdraw 7.2 million from the general fund. What I'm showing you tonight is that number is now 6.4. So it's less of a transfer from the general fund. The difference is 800,000.
It's general fund reserve
Yes.
transfer.
Yes, from the general fund
So
reserve. Yeah.
from the reserve, same thing, right?
Yep.
Okie dokie. So it's not as much, but we're still borrowing almost 6.5 million, not borrowing. We're using 6.5 million bucks from our reserve account to help balance this budget.
That is the projection. Yes.
Thank you.
That's the projection,
Yes.
but the projections have been off for 11 years.
I
That's
can look
another
into that.
discussion.
Thank you. I'm ready to.
Okay. So, well, thanks for clarifying that, and maybe we can work on my concern for the next chart. Thanks. Go ahead.
Sure. So, I mean, I do want to make clear for everyone here in the public, the bottom rows there is the general fund projection. So at final budget, the projection at final budget a year ago was 36.1 million and a 10.5% reserve. Moving further to the right under the 26-27 preliminary column, the projected end of year balance was 34.2 million and a 9.7% reserve. What we're presenting tonight in final budget is 40.5 million and an 11.4% reserve. And then to the right, you can see the changes that occurred between the last column to the bottom right. You can see the changes that occurred, 6.2 million increase in projected general fund reserve relative to the preliminary budget, which is the equivalent of a 1.7% improvement.
But the actual number from the end of last year was 36 million and now it's 40 million. Is that the final number, is the 40 million, or is it?
That is the number that we were able to estimate this time. It's what we call an unaudited number. There will
Right.
still be an auditor that comes in, but
Correct.
it's
But at this point,
fairly close.
$4 million ahead of where we were last year in
Correct.
actual number.
36 versus 40, yes.
Yes, thank you.
Yep.
Okay, that's dollars and that's dollars and it represents 11.4% for this year versus the 10.5 previous.
Right.
Correct.
All right.
When our revenues grow, so do our targeted reserve we're attempting to get to. But in fact, the gross number of money in the reserve, the dollars in the bank, went from 36 to 40 million.
Right.
40.
Correct?
It went from 36 as the unaudited number to a projected 40. Yes.
Okay, projected, all right.
Yep.
Well, they're both unaudited, so.
That's
All
right.
righty, well, that's a bit of good news in
Yeah,
a way.
it's positive.
It was an improvement.
Any other comments or questions? All right, next page, sir.
Okay. So this is your final budget summary. This is showing all eight funds that the district operates and its fund balance summary. At the far right is the total column. And let's see, the ending balance as of 26-27 is, you can see the estimated beginning fund balance as of July 1. So July 1 of this year was 216.7 million for all funds. And then you add in the revenues and then the expenditures, which includes all the items shown in the expenditure row. And then the change in fund balance, 158.6 million. That's what 5 million, which we just looked at in the prior slide. And that gets you to your estimated ending fund balance on June 30th of next year of 58 million. So you can notice in the bottom row, all the bolded numbers there are either positive or zero. In the case of the grants fund, it's zero because we anticipate spending all of our grant funds. And so the takeaway from this slide is that the district projects positive or zero balances in all funds, with the largest balances in Measure O Building Fund and the General Fund.
Quick question. In the top category, it says estimated beginning funds balance July 1 of what year, Sen?
This year,
So July 1 of 26.
that's correct.
And when you're saying estimated ending funds balance of June 30th, you're talking about,
27, the end of the fiscal year.
so you're projecting that will be our general fund, the balance will be 6,400,000 approximately less.
Exactly.
That's a projection.
That's correct. Yeah.
Thank you.
Okay.
Next few slides, we'll be looking, just take a little closer look at general fund revenues and expenditures. Starting with revenues, again, the total revenues are 350.5 million, which is a 12.6 million or 3.7% increase from the prior year. Property taxes, let's see, 235 million, which is 10.6 million over last year's budget. Charges for services are estimated to be 108.9 million, a $3 million increase over last year. Includes medic fees, which had a 300,000 decrease. PBGMT, it was at 25.7, a $2.5 million increase over last year. The voluntary rate range program had a $1 million decrease relative to 25-26. And CRD fees increased just 200,000. To put the formerly what we used to call the IGT fund, which included VRP and PPGMT, putting those together, transfers to the general fund would have been 25.1 million, which is $1.5 million less than 25-26.
What is that attributed to?
Transports. So we're just, these are transport related money. So fewer transports or fewer eligible transports for the federal funds. Mhm. This next slide is looking at general fund expenditures. Service and supplies costs 66.9 million, which is a 6.9 million or 11.5% increase over prior year. Just noting some of the changes there. There was surges in contracted ambulance services. There was diesel fuel prices went up. There was a headquarters roof replacement over our heads, and cyber liability also went up. Just a smattering of some of the changes. The labor budget overall is 281.1 million, which was an 8.3 million increase over the prior year number, 3%. There are no new positions in this budget. However, it does include funding for 4 academies, 2 MMP, and 2 firefighter. And the labor cost as a share of general fund revenues will be 80.2% in 26-27 forecasted, holding right there where it was last year. Question? Let's see. And then looking at the labor component a little closer, so just sort of some specific line items there. The compensation portion was 155.6 million, included wages up $4.4 million higher, constant staffing $1.9 million lower due to pool staffing. We now budget all our pool positions as full. And incentive pays for EMP, paramedic, education, and so forth were about $800,000 higher. And again, employee behavioral wellness added 3.1 million for this fiscal year. On the benefits side, which includes things like retirement payments to PERS and SCRS, personal medical expenses, dental, vision, all that sort of thing. Total compensation is expected to be 155.6 million, which is 2.4% more than last year. Excuse me, go back. Total benefits are anticipated to be 125.5 million, 3.8% more than last year. Includes the CalPERS pension contributions for safety and miscellaneous of $4.2 million higher. Increased employee medical costs of 1.9 million or 9.4% higher. And increased workers' compensation costs, just a tick up of 33,000 or 0.6% increase. So pretty flat on workers' comp or projection. Capital outlay summary. Total spending 154.5 million, approximately 146 million committed from the Measure O building fund. So again, a lot of that's Measure O. Noted on the slide are some of the big expenditures there. So Station 67 build out gets 6.4 million, 25 ambulance replacements, 4 ladder truck replacements, 15 Type 1 engines, 8 Type 3 engines, and 2 dozer replacements. Major capital outlay projects funded by other funds shown there in the slide. Station 67 build out will get from the Development Impact Fees Fund 7.7 million. And we've got a little bit of money left in the Zinfandel Training Center budget, just 200,000 spent from that. The next slide is the long-term forecast. So wanted to first kind of identify some of the key assumptions in the forecast. So it incorporates the latest county reports on property tax, which came out in July, as well as the independent property tax consultant projections. We also include current wage and benefit costs and natural growth, including step increases of about 1.7% they average every year. And there's no wage or staffing increases assumed. We use current and PPGMT and VRP revenues, the ones I mentioned. We just take those and grow those about 2% annually. We use pension costs are based on the CalPERS projected rates, and CPI at 3% through the whole 5-year forecast. There is a second slide, and I include for the alternative forecast assumptions, we added on some additional things noted there. When we add 2 stations, it would mean fully staffed. It would mean 58 additional positions for those 2 new stations. Also incorporated the lapse of SAFER funding in 28-29 and offset that by anticipated development revenues from into new development areas that we do not include in our forecast normally. So kind of put all that together to come up with a second forecast. Yeah.
Yeah, go ahead. We're working on this slide, yeah?
Yeah, on this line. So if we are going to project that PPGEMT and VRRP revenues are going to increase 2%, will that mean that in next year's budget, you're going to tell us that we're underperforming when we don't make the additional 2%, when we didn't make the 2% this year? In fact, we went the other way?
It will depend. Obviously, we have different things happening with each of those, with VRP and PPGMT. But yeah, if it comes up short, then we'll have to adjust it. That's a good point. We will have to adjust the forecast again.
Right.
And then just a quick, I was trying to find your email that you had sent me a while ago about, we talked about the pension cost increase at CalPERS.
Right.
And is that the 4.2% that was mentioned?
Yes.
Or that's
What did I say?
4.2 million? Wait, was that the percentage or was that the dollar amount?
I'm sorry. I'm going back to that
Yes,
slide.
sorry, I should have grabbed it earlier.
Okay. I can go back so we can all see. Oh, there it is. 4.2 million, 6.2%. Yeah, that is the,
So those are the dollar amounts.
yeah.
All right, thank you very much. I just needed to clarify that. I'm sorry, I couldn't find your email.
Fine.
Thank you.
Is that in line with previous years' increases in our PEPRA and CalPERS contributions and medical contributions?
It's come down. It was 6 million, 7 million in recent years, but you follow the markets, like CalPERS has had a great few years now. And so that starts to show up for us and like
So it's actually
lower
down.
coverage. Yeah, the amount of growth is down,
The
correct?
amount of dollars is down.
Yes, the amount of growth is down, yes.
Righty. Anything else on the
Raise.
earlier slide that we were on?
Get us back to there. Okay. Should I keep going?
Please.
Okay. So this is the first forecast slide here. So this is showing for 5 fiscal years, what the general fund reserves would be. The dollar amount is the red column there. And then the green line is the percentage. You can read all the way to the right. And I'll read off what those are, what they start and end at. The district expenditures are growing slightly faster than revenues. So your reserve ratio, the green line, is gradually declining. Reserves start next year at this year at 11.4% in 26-27 and get down to 9.8% for at the end of that in the last year there. Again, this projection is primarily influenced by changes in property tax trends and labor costs, like the two big drivers of our budget. Adjustments to either may significantly affect the outlook. Let's see, the 5-year forecast shows that general fund reserve borrowing continuing intermittently and a lower level than what we're seeing this year. So nothing close to 6.4 million. There would be no general fund borrowing next year. You'd see 86,000 in general fund borrowing the year after that, 871,000 in 29-30, and then the last year, 1.1 million borrowed in 2030-31, if everything held in the forecast. Yeah, so if the district's goal were only to stop the general fund borrowing and put an end to that, it wouldn't really, last year's $1 million, it wouldn't be that far of a reach given the overall size of our budget. So that is the forecast. Without the new variables, and this slide is those new variables that I mentioned before. Again, so adding 2 new stations, recognizing the loss of SAFER in 28-29, and then also adding in going in the other direction, the income that we'd receive from new development areas estimated at this time. The chart shows that the general fund reserve declines from 40.5 million next year to 6.9 million in 2030-31. So that's from 11.4% and all the way to the right. That's 2% at 6.9 million. Some things to keep in mind. This is don't mean this to be a big scary slide. Of course, the board has a lot of discretion here on how they want to implement these things. Maybe not so much on SAFER, but in terms of the staffing of those stations, the board has discretion on how that occurs, and that would significantly affect this picture. But just wanted to give you the sort of the straight picture based on what we know today.
And no, go ahead.
Mhm.
All right, thank you. On those, I see dollar signs here, but I'm not sure what our differential is. How, if we choose to staff 58 new, get new, 58 new firefighter positions for those two new stations, we know that we're talking about the future, so there's a definite timeline involved.
Mhm.
How much money is that on an annual basis? We were around 10% on the previous slide, then we dropped to 7.5? What is the number, the dollar amount for those three things, actually? The 58 firefighters, if we lost the SAFER grants, and then potential new development, well, that definitely has to have a timeline.
Yeah.
So what are our dollars for those first
Maybe the
two?
easiest way to look at that would be the last column where it's at 6.9 million. And that reflects all the pieces together, and compare that with the prior slide when it was 39.7 million. So so it's really about what, 32, 33 million.
That's what
But
those
but
three
last year is,
costs,
yeah,
they're in and out burgers, so to speak. That's our number.
yeah, that is a difference.
But is that, and that's through 3031?
Correct.
Okay. Thank you.
Can we go back 2 slides, please?
Sure. The assumptions?
Yeah, reading at the bottom, alternative forecast assumptions, fully staffing 58 positions for 67 and a new station at Grant Line, blah, blah, blah. It says offset by forecasted new development of property tax incomes. So here you're saying that you're offsetting those with the additional construction that's going to go on there. And then if we go forward 2 slides, please. Then you're showing that no additional revenues are coming in and the sky is falling. That's what that looks like to me.
Sure. This is the net effect. This is
The Chicken Little projection, if everything collapses. If the sun doesn't rise tomorrow,
well, it is what the slide says. It's 2 new stations and it's a SAFER, and it's offset by anticipated revenue from new development areas.
Yeah.
this one is, this last one is saying.
That is correct.
You're anticipating that all those houses are going to be built and there's going to be no money, or how does it drop from 40 to 6.9?
That is the impact of adding 58 stations and losing SAFER with the offset.
I think that's overly pessimistic. I think that's like a worst case projection, and our projections have been overly pessimistic for the last 11 years. Thank you.
About the next.
For one example, for the new housing development, I'm just taking a guess, a few years to build, a year to sell out, and then it's an 18 months delay for us to get the revenue on the property tax.
That's correct. Yeah.
And it's kind of, I mean, everything is sort of glacier-like. I see signs for development for Rio del Oro out off Douglas Road, and I first heard about that 20 years ago. So that idea of how soon can any public agency collect revenue from new property taxes, to me, that goes way beyond, it can go way beyond 3031. But it is a huge unknown for all of us. It is a big unknown. Are there any further questions up to this point on any of the slides? Okay, thank you. Please continue.
Okay. This is the budget summary slide. So highlighting what we just covered. Since the preliminary budget, the final budget still projects a structural deficit with a projected transfer of the general fund reserve balance of 6.4 million to 40.5 million. The final budget general fund reserve projected is declined from 12% at mid-year down to 11.4% at final. And the general fund revenue growth, 3.6% higher than prior year, while expenditures are growing a little faster at 4.4%, excluding a one-time payoff of POB bonds. And the district continues to face uncertainty in medical transfer revenues. So that's something we're watching closely. There's some federal potential changes on the line, but not for a couple of years. 5-year forecast shows modest reserve borrowing will occur, subject to significant changes in property tax and labor costs. Always, again, the 2 big drivers there. And the 5-year forecast shows significant new cost pressures with the addition of 2 new stations and loss of SAFER funding, if all that were to occur.
I have one clarification on this. Does anyone else have any question on this particular slide? And perhaps I'm missing something here, Dave, but on a previous slide, it said that 25-26 reserves were at 10.5%, and that 26-27 reserves are going to be at 11.4. So I don't understand this 12% in 25-26. Can you help me understand that?
Sure, that was I referenced the mid-year amount at that was 12% at mid-year, but then when we finished the year.
Oh, the
it was-
mid-year,
It was
okay.
different, yeah.
Well, that's pretty sneaky now. You got me on that one.
We do 3 budgets a year, so the number moves around a bit. Yeah.
All righty. So, but it is accurate to say we've moved from 10.5% to 11.4% projection for.
Yeah, that is
reserve.
exactly. 11.4%
Thank you.
is our projection for
Thank
this
you.
year. With that concludes my presentation. Welcome any other questions or comments.
Right.
But I'm contained. I just want to ask my questions as we're going along, because what happens when we blow through this thing of 15 slides, by the end, you lose a couple of the points that are germane.
Understand.
No, Director Stark, I totally agree. It's quite a lot of visual for me.
It is.
And it is better for me to take my little notes and ask. So it's, I think it's very constructive.
Things are being fine.
Yeah. Theoretically, let's be good about this. Okey doke. Are there any, well, that concludes the final budget presentation, correct, sir?
Madam Chair, it appears we may have a public comment. It's up to you whether you want to allow it since that period already lapsed, but it appears that Russ wants to make just because he's standing there and
Oh, has a speaker card been submitted?
no. But are you wanting to make a comment?
What's the topic? Well, it was already on the agenda, so, okay, go ahead. We'll do it 2 or 3 minutes. Go.
3.
Welcome to the podium. I forgot.
It's Russell.
Russell,
Yeah.
welcome to the podium.
Good
Russell.
evening, Madam Chair, Board of Directors, Chief House. Russell Gardner, Director 522. I wish I was able to pull the presentation back up, but I don't know if you guys have it in front of you still. Early in the presentation, CFO O'Toole pointed out sort of some of the general fund revenues and stuff. There's a lot of conversation about it. And around slide 4-ish, where there's a gray box at the top, and Director Stark asked about estimated fund beginning on July 1 of this year. That number, $46.9 million, okay, is the money that was left over from 2025, correct? Okay, so if we go to the slide prior to that, where he says there's $36.1 million that was going to roll over, because that was his projection a year ago when he was talking to this board about what the end state of 25-26 looked like. So that's a $10 million difference.
Mm-hmm.
So when he's telling you a year ago that we're going to have 36.1 and we have a 10.5% projection, what disappoints me is the fact that he had an opportunity tonight to come up here and say, we actually ended with 46.9 and give an updated percentage. By my math, it's about a 13.7% reserve fund. That's a big difference than a lot of the words that have been coming out and the numbers that have been just talked about at this podium from CFO O'Toole. It would indicate a much more healthy organization than what we're seeing portrayed on the slides and the presentations he gives consistently. So tonight, I just wanted to point out, we, meaning 522, dive into this stuff heavily, and we are finding these little holes, and we bring these things up. And it's not to say he's doing a bad job, it's just correct the record. You said it was going to be a 10.5 a year ago, and I understand it's a projection, but we're much healthier than that. It was off by $10 million for all the reasons he talked about in his presentation. We rolled over 5.4, labor expenses maybe a little bit less, maybe some revenues might have been a little bit higher, who knows, whatever combination it was. But when it all boils down, we rolled over 46.9. A year ago, he told you 36.1. It's a big difference. Any questions?
Oh, I'm sorry, this is public comment,
Oh,
so
all
we'll just
good.
take the comment.
Thank you.
Thank you for your thoughts. All right. Any speaker cards? Madam Clerk or Ethan, anyone online?
No other public comments. Thank
All
you.
right, thank you very much. Well, that concludes the Finance and Audit Committee meeting for tonight. Our next meeting date is October 22nd, 2026. Thank you.